Hey, what's up my friends? So in this video post, I'll be explaining to you, why shifting your stop loss to break even too quickly is actually detrimental to your trading performance in the long run. Because I see this pretty often among new traders where they put on a trade, the trade goes in their favor by a little bit, and then they quickly shift their stop loss to break even. And when they shift the stop loss to break even, there is this psychological comfort they have, knowing that they will not lose a single cent on the trade. But is this really the right thing to do? So in this video post, I'll be explaining to you, on why this could actually cause you more harm than good in the long run. So with that, I'll see you there. Okay, so let's have a look at this chart. This is the chart of the Euro Pound, the daily chart. And as you can see, right, this chart is in an uptrend and it's coming into an area of support over here. So you look at this chart and you know what Rayner will say, oh, this is an uptrend, price is an area of support, alright, you should look for a long opportunity. And this is what you did. So basically you got long over here. Let me change this line to green. So you got long at this green line over here when the candle closed higher. You place your stop loss, say somewhere over here. And you have a profit target somewhere here. So this black line here is your target profit. The green line here is where you went long. And the red line here is where your stop loss is. So let's analyze what happens. Well, price went against you. You're feeling a little queasy, uncomfortable. But eventually, price went in your favor and you start feeling better once again. You feel relieved. So at this point, you have some open profits and you tell yourself, hey, you know what? I'm not going to lose a single cent on this trade. I'm going to shift my stops to break even. And that's what you did. You shift your stops to break even. So price eventually stalled for a while. And before you know it, you got stopped out at break even when this candle dipped below the line. So you got stopped out of your trade at break even. So now let's think for a moment. What if you had not shift your stops to break even? What if your stops was still at its original location? What would have happened? Well, you can see that clearly it's not an easy trade. Nobody said trading is easy. You have this, whipsaw to handle. But eventually, price did manage to hit your profit target over here. So had you not shift your stops to break even, this would have been a winning trade. But this is not the point. I want to highlight this thing over here is that the location where you exited your trades at break even. I want you to think about it. So you exited your trades at break even basically over here. So think about it. The reason why you went long was because of this support area here. Am I right? This was an area of support and you decided to get long over here. And at this same area is where you exited your trades at break even. So when you are long in the markets and you exited your trades, you're basically selling your position at this support area over here. So if I were to draw this diagram, let's say this is a range, you basically got long somewhere over here, price went in your favor by a little bit, and when it came back down, you sell your position over here near the low of the range. You sold your position into an area of support, the low of the range. Does this make sense? Because clearly your thought process is contradicting one another. The first reason why you went long, let me get rid of this. The first reason why you went long in this range where price came back down, you went long over here because it's an area of support. And when price trades higher and comes back down again, this same area of support is the same area of support. It is not broken yet. So when you exit your trades at this area of support, it clearly goes against your first thought process where you went long at that area of support. This, when you went long, you're thinking that the area of support will hold. And right now, when you exited your trades by selling into an area of support, it clearly contradicts with your first thought process. And I want you to think about this for a moment. Why did you do it? And the basic reason, the most fundamental reason why traders do it is because of the fear of losing. They are afraid of watching their trades become loser. They are afraid of losing. And they decided not to lose a single cent in this trade. And this is why they set their trades to break even too quickly. So let me share with you another example. Let's say look at this chart. You look at this chart and you see, oh, it's in a downtrend. Great. This is an area of resistance. And you know what? This is area of resistance is an area where I should short. So let's say, for example, for a moment, you notice that, okay, you went short at this 2 candles selling lower, trading lower. You went short at this green line over here. And you have this red line over here as your stop loss. And this black line over here as your profit target. So the green line is where you went short, the red line is your stop loss, and the black line over here is your target profit. So once again, let's have a look what happens. Well, you can see price, it went in your favor. Also, okay, you're feeling good about this, and you tell yourself, you know what? I want to shift my stops to break even. Because I don't want to lose another cent on this trade. So you shift your stops to break even. Then at this moment, price start retracing against you, but you know what? Your stops is at break even. You cannot lose a single cent, so you're not worried about it. But look what happens. Price then starts going in your favor, starts retracing, and poof, you got stopped out at break even over here. So you're relieved, right? You did not lose a single cent on this trade. It's a scratch trade. It's a break even trade. So all is well. You're thinking, you know, move on. But let's look what happened if you had not shift your stops to break even. You see that price did eventually hit your profit target. So can you see what you are doing in this scenario over here, which is clearly similar to what you've done previously? For example, this is a range. You got short somewhere over here in this range. Price then traded lower. And then you start retracing against you, and you exited your trades at the same location where you went short. You exited your trades at the area of resistance. So does this make sense? Because you went short at the resistance, and a moment later, you went to cover your trades and exit your trades at the resistance area. And when you cover your trades at resistance, you're basically buying your position. You're buying your position into an area of resistance. And if you ask me, these two line of thoughts is clearly contradicting with one another. It does not make sense. So again, you have to understand why you're doing this. And the reason why traders are doing this is because of their fear of losing. They fear of watching their profits become losses. And this fear is crippling them that they are making trading decisions that are not rational. Because clearly, from what I've explained, you see that one moment you're shorting at resistance, the next moment you're buying in front of resistance when you're covering your trades. So this is clearly, you know, contradicting. So I want you to be aware of this. Aware of this mistake that is actually haunting many traders out there. So yeah, I hope you find this video useful. I hope I managed to explain the concepts clearly and to let you understand why setting your trades to break even may not be the optimal thing to do. Because when you set your trades to break even, what's going to happen is that you're going to have a lot of break even trades. Trust me, because you set your trades to break even too quickly. So you have lots of break even trades. Then you have some losses that you'll incur, and you have some trades that goes to target profit immediately. So all in all, when you look at it, you're either going to be a net break-even trader or you're going to be a losing trader because your profits may not be enough to cover your losses. And now think for this for a moment. Let's say you decided not to be so aggressive with setting your trades to break even. So this time around, it's either trade is going to hit your stop loss or it's going to hit your profit target. So you have much lesser break-even trades. You have more winning trades, and you also have more losing trades. But because of the fact that you're trading with a favorable risk to reward, there's a good chance that your winning trades will be able to offset your losing trades and making you a profitable trader in the long run. So this is something for you to consider, right? Because I've seen this issue haunting many traders, and I hope you understand my point of what I'm trying to bring across. So yep, that's all I have for you in this video post. If any questions, any doubts, feel free to leave it in the comment section below. With that, I wish you good luck and good trading. I'll talk to you soon.